Mark, thank you so much for joining me today and welcome to the Finimize Podcast.
Thank you, Carl. Good to be here.
So maybe just to start off, could you give me a brief introduction to Sarwa? What is it and how does it differ from traditional trading platforms?
Yeah, of course. So Sarwa is one of the leading investment platforms in the Middle East, focusing specifically based in the UAE. Sarwa means wealth in Arabic. So to speak a bit to our mission of creating, hopefully generational, but at least enough wealth to be financially independent for young people. And it differs from other platforms by having a more holistic view. So instead of focusing on just people buying and selling, and we try to help them look at the bigger picture, to think both long term. If people want to speculate as well, that's also completely fine, and helping them have other tools such as savings on the lower risk or crypto on the very high risk. So we differentiate by being a one-stop shop where people can instead of having their money fragmented across so many different apps, they can go to one provider that they like and deal with that app.
Awesome. Okay, so we're going to spend some time digging into some of those aspects a little later on. But maybe can we spend a bit of time on your experience? Can you let
Mhm.
everybody know a bit about your background? And one question I always like to ask is, what's your unique or unfair advantage that gave you
Mhm.
the insight to start Sarwa?
Yeah, of course. I guess they're very related because I'm originally Lebanese, but I studied at McGill in Canada and worked there. So I was able to view and have a perspective across both countries, and they're quite different as you can imagine. And while I was working at Accenture in consulting, I was focusing specifically on banking as my background was in finance. And I
Okay.
realized that we were seeing the digital transformation really kick in. This was in 2016-17 across many banks really investing a lot more in digital and
Yeah.
making things a lot easier, whether it's account opening or portfolio management. Versus when I would go back home and visit the Middle East, I would see that it wasn't really there as either as a dialogue or as actual change.
Gotcha.
So I felt like it was still, however, the Middle East is known to be very young, with just a general appetite to change things. Specifically in the UAE, that they're very bold in how fast they're catching up and how fast they're changing things. So that, I guess that's kind of the unfair advantages when I looked at my co-founders and I's capabilities. I felt like we were a very good mix of having the right experience between finance, software engineering, market knowledge, banking knowledge, and we can bring that all together to launch the first investment platform as a fintech that will revolutionize how easy the experience can be to get people to invest at a younger age in a more confident manner.
Awesome. That's a really powerful mission. So can we maybe talk a bit about how those young people in and across the UAE are behaving? So you
Hmm.
mentioned, you've got that long-term investing piece,
Hmm.
you have the speculation piece in
Yeah.
stock markets, and you've got, the higher risk speculation in crypto. How do typical users, move between those three offerings? Do they start off relatively conservative, or do they do more of themselves over time? How does that work?
Yeah, I guess one thing we've observed is that initially when we started, it was much more conservative.
Okay.
The conversation was much more around either savings or real estate, but nothing beyond that. I think we've really seen it shift gradually, and each year had a different flavor.
Yeah.
Where we pioneered and we focus on robo advisory. So this is the long-term passive investing, and a lot of people, and until today, it remains a very growing movement. As
Yeah.
we entered COVID, I think this is where speculative and trading really kicked in, where we start to see a lot more volatility and people just we were all at home. There was just we saw the
Yeah.
savings rate go up because we weren't spending as much. So people started to question how can they put their money to work. Trading got very much more popular, like I would say in the 2020, and then crypto then took over
Yeah.
for a little while, and then kind of everything then started to be challenged, and now we're still in this period where people are are trying to figure out what is their actual risk profile and how to diversify appropriately. So I don't think we haven't seen really one trend from one to another, or we've seen it across from all directions. We've seen people maybe start out with a savings and then move up to investing and dial up their risk. We've
Yeah.
seen other people that skip the savings piece and go straight to crypto and then realize, crap, I should have probably had an emergency fund before
Yeah.
taking all that risk. So yeah, it just became really clear to us that you need to play across both risk spectrums because people evolve.
And I guess one of the huge challenges potentially is, you know, that client who goes in and says, I'm going to go and, invest in crypto and try and understand that market,
Yeah,
probably needs a bit more education around the emergency fund. And, they might otherwise they find out the hard way that they maybe need to work on the saving and investing fundamentals first.
yeah.
How do you approach that from an education, from a content standpoint?
hmm
From a Finimize point of view, we always try and meet people where they are, where they're having that conversation, and instill good habits. But it's admittedly very difficult to say, hey, think about the long term when in the crypto bull market a couple of years ago, things were going up 100% a day.
Yeah, it's Finimize is a perfect example of doing that because it's striking the right tone of voice where you're not talking down to someone.
Yeah,
So what the crypto industry, the way it was able to get so much momentum as well, from an education, it's resonated. Even if you look at the CEO of Binance,
yeah,
he has a very he's very easy to understand. He speaks in a matter that's very different, let's say, than the CEO of a UBS or a bank. That's just
yeah,
much more professional and wants to kind of give you credibility and trust in a different way. So I think by
yeah,
having an easy to understand English or tone and doing a lot of content and webinars in a way that makes it more exciting and
yeah,
whatever people are talking about, getting in there and having a view has been a really cool way to educate. Um, I think another thing where we do differently than crypto is one thing that bothers me sometimes about the crypto industry is they'll use concepts from stocks and apply it to crypto.
yes,
So for example, in crypto, and they got hammered for it, where they'll try to it's one thing to say crypto could be a hedge against X, Y, and Z, but let's not go
mm,
as far as saying crypto is a safety net.
yeah,
So I think also because we have other products and our initial foundation comes from long-term investing in stocks and more retirement, the equivalent of what could be retirement planning.
yeah,
Crypto, we don't shy away from tagging it for what it is, which is still extremely risky. So I think that's one way we educate better, I would say, by calling it
yeah.
what it is, as opposed to having to trying to use other concepts from stocks like DCA and things like that into the world of crypto.
Yeah. Interesting that you called out that example. Obviously, we're fresh off the SEC decision around Ripple
hmm
and XRP and whether that was being treated as a security or not, and in certain circumstances, depending on whether investors had a certain expectation of
hmm
access to profits of a company like you would with a stock. And yeah, it's a really really important debate for sure. Um, Maybe just one last point on crypto because I know we will get hammered if I don't ask you that. Uh, Security is a big concern
Yeah.
in crypto investing. If you don't own your keys, maybe it's not
hmm
your crypto. How do you address those concerns? How do you look after users' crypto funds?
Yeah, I think it's as you said. First of all, it's awareness around what is the maximum point of security? What is the second? What are the layers of security that I should know of? Am I dealing with like we always do webinars where we speak against firms that are not regulated, as an example,
Yeah,
specifically regulated in your jurisdiction,
yeah,
because that's where you're going to get the most support in case you want to reach out. So that's some of the education we do. Crypto and other products is dealing with a regulated entity, understanding the value chain. We put it also on our help center to see where your where the custody is. And I think it's also working. One thing we've learned last year is that it's not a once and done exercise where okay the custody is with this entity and that's it. You have to do
Yep.
ongoing due diligence. You have to be very, very dynamic. So the partners we also work with have reacted very swiftly, both in communications or having to do any measures so that you always preserve security. Um, so all of this, while it being said, being aware of the systematic risk also that's in crypto. So,
Yep.
so yeah, so I think not misrepresenting it for being risky while also doing your absolute best to work with firms that take security. Like Fireblocks is often a leading example of that firms like to work with an institutional one specifically. So, so yeah, hopefully that answers your question, but it's
Yeah.
it's it's one that we're constantly also monitoring and doing
Exactly.
our best at.
Definitely a moving target for sure.
Mhm.
Cool. Let's switch gears. Everyone is super interested in markets. This year has been a helter-skelter of a ride. We've seen retail investor optimism pick up through the first quarter of the year. You then saw, Silicon Valley Bank, Credit Suisse, all of those banking turmoil, troubles, sort of shake that confidence a little bit. But if you look at the US, the chances of a recession are diminishing even as rates are rising and maybe the rate rises are starting to peter out. Retail investors alongside have, been sort of benefiting from the US bull market. You've had, as I mentioned, AI leading the charge there. How, I guess, in the UAE, right, the macro environment is much more stable. Arguably, you'd say, even positive, certainly compared to Europe and in the US. So how are your investing customers behaving? Do they, are they, responsive to what's going on in the US and Europe and China, or do they look at their local economy and, use that as a gauge for their own sentiment?
I would say I would say they're actually more connected globally than locally.
Okay.
The content still remains very much driven by, or the content that's being consumed, I found, whether it's institutional or retail, it's still very much driven by the same sources rather than its own
Yeah.
independent. Um, and we can talk about maybe the media as well, but I felt like in general it maps when I speak to other founders of other investment platforms, we see similar retention data, we see similar trends, similar pickup
Mm.
in one product or another that kind of confirms that while there is, of course, localization, I'm not
Yeah.
undermining it, but it's more there's a general behavioral uh, yeah, there's general behavior where you're all kind of monitor some of the same indices or the major indices globally that
Got
leads
you.
to a similar one.
And out of interest, maybe from when you speak to your users, what is their financial media diet like? For instance, if you speak to clients, are they picking up? Are they going to the Bloomberg website first thing in the
Mm.
morning and having a look there, and then going to maybe the Wall Street Journal, and then maybe some local publications? Are they purely on? I think is it Ashark, the sort of Bloomberg Middle Eastern offering. How are they consuming financial media?
Yeah, I would say they're sticking to the global names such as the ones you
Okay.
mentioned, plus obviously some of the investment platform that they're using as well. So such as
Yeah.
Sarwa, we provide a weekly update, or other ones will have a daily or a quarterly, depending on the frequency they like to engage in terms of news with their. But it's still very nascent, I would say. So
Mm.
locally, um, more recently, it's become a trend where you have more regional IPOs, but
Yeah.
that's a very new trend that we've seen as of last year that's picking up, where that warrants radio coverage, for example, a bit more, where people are starting to follow
Okay.
it, and then based on the radio, you have the local newspapers that follow. But I would
Got
say
you.
it's still, I think local media is really good to identify new players or more at the company level, but they're all still
Yeah.
monitor whenever they want to monitor when it comes to their portfolio investing, they'll use the major outlets to have if they want to look at Tesla or some of the big names in the S&P
Yeah,
500.
got you. So is it fair to say that, the biggest drivers of sentiment across, the investors that you speak to in UAE is global rather than local?
I would say so because even I remember when last year the market started to tank and become more gloomy in the West. I was surprised by how quickly some of the gloom and doom carried over regionally
Okay.
when nothing had really changed. If anything, it was improving or was positive, as you had mentioned. Yet
Yeah.
the sentiment immediately changed across the board because the media consumption is one and the same. So,
Got you.
so it still
And I guess,
controls the sentiment.
yeah, and that creates, I guess, both challenges and opportunities. If I think about the
Mhm.
less about the speculative side of people's portfolios that they're managing through Sarwa, but the long term, retirement, pension kind of segment of people's portfolios and of the market. I guess on the one hand, and maybe you can tell me a bit of what you're seeing in terms of how your customers behave. On the one hand, if the US market looks cheap,
Mhm.
it's potentially a great time to buy for 10, 20, 30 years into the future. On the other hand, if I'm getting nervous and a lot of my holdings are local stocks, so if I own a bit of Aramco or IHC in Abu Dhabi or something like that, those companies are relatively stable, relatively insulated, and there's a risk that I'm overtrading overtrading my portfolio and losing out in the long term. How does those dynamics play out?
Yeah, it's really well said. I think one question we used to get a lot more earlier, and now it's kind of fading away, which is why shouldn't I just put all my money in the S&P 500? A lot of people are starting to realize, um, there should be more localism or stronger ties to their immediate um, geography because we've experienced it, for example, in the UAE with rent, where
Mm.
a lot of people, the rent started to go up and they realized, okay, well, I do need to factor somehow into my financial picture. What if the cost of living increases so much and I have zero exposure other than my salary
Yeah.
into the region? So investing in local companies could be part of it. I know, like Andrew Hallam, which is an award-winning personal finance author, helping specifically expats. He designed portfolios, for example, of ETFs where if you are Australian, if you are Canadian, you would have a different allocation depending on your
Okay.
nationality with the intent of potentially going back home to retire. So,
Got you.
and so you would probably want to be more overweight in your nationality or your country you're looking to retire to with the hedge so that in case it really increases, you don't want to be left aside without having any exposure to it.
Yeah, that's a really good point. It's really important. And is that so? From a Sarah point of view, I
Mm.
remember reading that your Robo advisor is a mix of Robo and sort of human.
Yeah,
Is that where the human piece comes
that's
in?
exactly
To
it. It's a lot more yeah, that's it. I was gonna get to that because all of these insights, all of that additional personalization, uh, it's still best done through a human connection or at least a web
yeah,
or media. So so in terms of our robo side, this is where you'll see us be much more agnostic to regions. We'll be much more diversified. And on the
yeah,
trading side, we take more of a backseat and more of an enabler, where people
okay,
will end up doing their own thing. But if they want to start to ask us about geographic or industry diversification, we'll cover it on our robo advisory side.
got you. Okay, that's really good to know. Super interesting. Um, what are you able to share about client flows? And what I mean by that is, one of the one of the most recurring questions we get from institutional partners, but also from other retail investors is, hey, what are people buying right now? What are people investing in?
Mm,
So, we've kicked off US earnings season. We've had big banks. Uh, the energy complex is expected to show declining earnings growth, which obviously on that local side, Aramco could get caught up in that. What in that trading side of Sarah,
mhm.
what are some of the popular ideas and how are people behaving?
Yeah, I guess one things, some trends that could be interesting from retail investors. In the first quarter, we've seen a lot of influx into savings, as an example.
Okay.
So that was
Yeah.
our like leading, one of the leading new inflows where people, but that's also from us launching a way where people could put a deposit with, or sorry, to save with with our partner banks. Then in Q2, we saw much more trading activity. So trading volumes really picked up,
Yeah.
um, in line with the first half as well, where it was higher. I think crypto has been rather more stable in terms of activity,
Okay.
not as volatile or not as increasing as stocks so far. And I think it's given, as you said earlier, some of the examples, just given there's even more uncertainty or discomfort around it, or a high risk appetite that we don't necessarily
Yeah.
attract. We've never been the go-to platform for pure crypto, as much as if you want it as part of your allocation and you don't want your app in so many areas, then
Yeah.
bring it there. And yeah,
Okay.
I think in terms of planning or long-term investing, that's generally more consistent. It doesn't vary as much as trading, for example.
Yeah. Of course. On that long term investing point, I guess sort of two questions in one, or question and a comment. So we surveyed just under 4,000 retail investors, and asked how they thought about managing their money in the future.
Okay.
Uh, 63% said they wanted to self-manage funds, or take control of their funds in the future. So considering the Robo piece of that invest platform, I guess how do you see the focus of Sarwa's offerings developing in the future?
Yeah, it's a very good point. I think a lot of this kind of statistics and or like qualitative interviews or feedback we got from customers is what pushed us to launch trade Sarwa Trade initially.
Okay.
We weren't
Yeah.
really, when we started, we weren't really planning on launching so many different verticals. We were just
Yep.
thinking we would do our robo advisory piece and focus purely on that. But we
Yeah.
knew that we would lose potential people that are just want much more control. So instead of trying to tweak the portfolios or add features, and we just kind of gave the platform for them to pick and
Yeah.
choose as they wish, and help with the user experience, the funding flow, the customer support, all of the things around it to support. So I definitely see that statistic. I can relate to it,
Yeah.
and is one of the reasons we switched our business model. What else? I would also, however, say that the robo advisory is kind of an in between. It's not
Yeah.
pure passive. Like it is on investing on cruise control, but it still has some of the elements that people appreciate um, in trading as well, which is it's very mobile first. It's very much
Yeah.
you can personalize it here and there. You can change your risk profile, your allocation. So also being in control could still mean that you are using a robo advisor, but
Hmm.
you're that takes care of all of there's a lot of things in investing that you don't feel like doing, like rebalancing, reinvesting your
Rebalancing.
dividend. Like there's a lot
Yeah.
of tedious thing that you think initially trading seems super exciting, or investing can seem
Yeah.
exciting, but there's an aspect to it that's very boring, that a lot of people don't want the responsibility of doing that on a
Yes.
monthly or quarterly basis.
Yeah. That makes a lot of sense. And I think even if you set out somebody's 30-year investment plan, with dividend investments with a shifting allocation over time, it's difficult to then tell that person will turn around to you and say, "Hey, all my friends are buying Bitcoin. I want to buy some Bitcoin," and the plan goes out the window. So I think it's important to be able to enable people to do what they want
Yeah.
with you. And a lot of our members use sort of an 80-20, or a core satellite, I should call it, approach, where
Yeah.
80% of their money is tied away long term, very responsible, and with 20% of it, they pick stocks, or they put
Yes.
it in crypto because what if, and so on. And yeah, I don't think one is good or bad. I think it's just people are more complex than uh, we'd perhaps like them to be when we're designing products.
That's exactly it.
Uh,
I think that's the big learning is that it was too theoretical to expect to put 100 be
yeah,
100% in passive and assume that you're not going to change across your 30 years. Imagine how much change sometimes is in 1 year and what you learn from that. To expect that um, is almost unreal. It is unrealistic for people that the court satellite is a really nice approach where you can do both.
yeah,
Play on different risk profiles. Nassim Taleb, who wrote The Black Swan, also has a strategy called the barbell strategy, which is
yes,
90% safe, 10% very risky, and it leaves it, it's very open-ended on what you consider safe or risky, but at least it leaves that flexibility to even Benjamin Graham, a very known investor, will have that in his book to emphasize know when you're speculating, know when you're investing, and
yeah.
that awareness is very critical for every investor to know.
Where do you think the future of investing is going? I know it's a very big question, but I guess which trends that you're seeing at the moment do you think are likely to shift how this generation of investors behaves over the long term? Because there are already differences between how Gen X and millennials save and invest and even trade compared to baby boomers. So, do you see more changes within the group over time? Do you think, or maybe put another way, the argument against new investing platforms and new broker services is that as soon as people get sufficiently old or have sufficiently complex finances, whether that's marriage, property, children, or inherit a sum of money, they're going to go to the incumbent brokers because there's no choice. You have to use a wealth manager or an IFA or whatever it is, depending on your market or region. And platforms that are robo-based with some human touch or that allow me to self-direct my investing become too high risk. I guess, what do you make of that argument? Or if you don't buy into that argument, how are we going to change how we behave, in 20, 30 years with our money?
Yeah, it's a big question, as you said. I think it's about having the right setup right from the
Mm.
get-go so that you're a lot of the fintech platforms ultimately, when you dig into it a bit further, the custody and the safety business, they will work with the banks as opposed to try to take over the whole value chain.
Yeah,
So in terms of and as you said, if you have a hybrid model from the get-go, then you do have a personal touch. You do have a chance to get better pricing as your balance increases, get a dedicated relationship so that you don't feel like it's all automated
yeah,
or human. There's people would want that flexibility because when it comes to personal situation, especially maybe taxes, moving
yeah,
back, some all of these nuances, you could build a tech platform, but it's going to take you a very long time for it to be really accurate. It's kind of
yeah,
what we're seeing with AI as an example. We're seeing it um, covering a lot of the most common cases or chat, but as soon as you start to get very specific,
yeah,
um, it's not quite there yet. Maybe it will be. I think the same applies to tech, where you don't prioritize edge cases as much when you're building,
yeah.
by nature of just wanting to go faster. So, so that's kind of yeah, that's how we think about it. We haven't seen our biggest accounts, or in general, like now that it's been a few years, we haven't seen that trend really materialize.
Okay,
Um, but it's also because we were less we started to offer new products. So as long as we're keeping up with the evolving needs, I think a lot of fintech platforms will get to the same endpoint of where some of the banks are.
got you. You mentioned obviously part of your success being down to launching new products. What's in the pipeline for Sarwa? Are there any new products, developments, features that you can share?
For now, I think this year we're focusing on features and products that, or other features that apply to all products. So, for
Okay.
example, the funding experience or support or in general things that can benefit all consumers across our four verticals.
Yeah.
So as opposed to previous years where it's one after another. Um, and after that, I think it's going to be a matter of what are the asset classes that people want as part of their portfolios that they're not finding with us. So it's always a mix of, um, yeah, it's about, for example, um, real estate, gold, other verticals that typically we've seen as not necessarily part of Sarwa. We're now also
Yeah.
looking at what are some of the other things that people want as part of their wealth that we can help
Yeah.
them do it in a transparent, low cost, and good way.
Are alternatives on that roadmap?
I think so. I think so. It's just about I think now what's really one thing that's really on my mind is more just a balancing between a high risk and lower risk part, and maybe people that might be looking at even options as a way to hedge against certain scenarios. So that's also something we know that with our brokerage partner is on the roadmap. So so yeah, I think our customers in general are becoming more sophisticated and they're starting to ask for whether it's alternatives or options, and as they just become more comfortable with investing.
Fantastic. And then we're coming to the end, so just a couple more quick ones. What advice would you give to individuals who are, starting their investment journey, and to those maybe who are a little bit along the way? You mentioned a couple of investing books as we've been talking. What's the one book that you think shaped your thinking as an investor the most?
If I can get to the first one, I would say is Random Walk Down Wall Street is a book I really enjoyed, and and the complete opposite of that is, I would say, not opposite, but a very different view is Black Swan, or Fooled by Randomness, rather, by Nassim Taleb, who's also Lebanese. I think these are what I like about different, or the advice I would give is just to understand first what's out there. As I feel like when I look at my experience and those of my friends and family, we jump too quickly into whether it's crypto or trading or like one way of doing things. But maybe it's better first to understand what's on the menu and what resonates most um, from also an independent source. So rather than just a platform that is incentivized to get you to do this one thing, I think it's really important to just understand the differences between stocks, ETFs, and all different types of instruments, while without necessarily delaying when to start, because you can also take you can learn as you go, but first step is to really identify what are the options, because with tech today the minimum to start is no longer in the hundreds of thousands of or millions to access most asset classes.
Yeah. That's very true. You wouldn't be a successful founder and CEO if you didn't give me 2 book recommendations when I asked for one. Always pushing for more. It's promising. It's promising. And finally, where can people find out more about you and about Sarwa?
I would say our main platform is on LinkedIn, where that's the one where we're the most active. But in general, through the website or major other social media channels as well.
Fantastic. Mark Chahwan, thank you so much. It's been great having you on the Finimize podcast. Thank you
Thank
for
you,
joining.
Ka. Thank you. I really enjoyed it.